Welcome to the 2023 Q4 market review. Let's get right to it. Remember when I first introduced you to TINA? The acronym for There Is No Alternative was true for the stock market for quite some time. And because no other good alternatives but stocks existed back then, that was one of the reasons I felt we'd have the V-shaped recovery that we did after the start of the pandemic in 2020. Well, alternatives to the stock market now exist at increasingly attractive levels. Tina saw that empty punch bowl and went home. Good alternatives to stocks are just one of the reasons I'm more cautious on stocks for 2024. Many analysts have actually been warning that recession could begin as early as 2022. And when that didn't happen, then certainly in 2023 it would happen. But no. Here are 4 quick reasons I believe recession hasn't happened yet. Inflation peaked at about 9% in June of 2022. It's been moving down steadily since then, and it's less than 4% now. Traditionally, recession or not, once inflation peaks and begins to come down, stocks rally. The presidential election cycle theory has a strong history of favoring the third year. 2023 is the third year, and we're in the last quarter of that now. The inverted yield curve is a strong indicator that recession is coming, but it takes 15 months on average to take effect. The inverted yield curve is when long-term rates are yielding less than short-term rates, and that first happened in July of 2022. History showed us that 2023 was most likely too early for recession. That 15-month mark is just hitting now. Americans were flushed with pandemic cash between 2020 and 2021. And boy, did Americans spend. Not so much on services, because many services were closed to us, but goods. We purchased things. We spent on Amazon. We bought Pelotons. And after staring at the same 4 walls for months on end, a lot of us decided our homes needed an upgrade. This was a big boon to the economy. But M2 money supply is low now. Cash is drying up, and the consumer is not looking to be the economy's hero next year. We leave these tailwinds behind as we flip the calendar the next several months. But we also look to be adding headwinds too. What are those? 2024 is a presidential election year. And no matter what side you're on, the risk for what I call black swan events is looking to increase. I produced a video showing that over the decades, stocks overall don't really have a preference for what party is in office. But it does not like uncertainty. And I believe next year to have a higher probability for the unexpected. The percentage of profits needed to service our national debt is at a 20-year high, and projected to be higher than at any time outside of being in a major war. Because it's not just about how much debt we have, but what percentage of our GDP is required to service that debt. We'll likely need to raise taxes or cut spending to bring this ratio down. The probability that either or both of these things will occur is rising. Corporations have yet to fully feel the effects of rising interest rates. Remember, March of 2022, we went from 0 to a 0.25 percentage point. September of 2022, we got to 3%, and we didn't hit 5% until this past May. The higher cost of servicing debt will start to roll over soon, and that can begin to negatively impact profits. So, where does this leave us as investors? The first lesson is don't overreact. Timing the market is a fool's errand. And as always, the news is not 100% negative. For example, it's difficult to have a recession with unemployment this low. Also, if I'm right about recession and a possible market correction, it could happen as early as this October or as late as next summer. That's a 9-month window. A balanced and better approach for long-term investors is to take some profits on the stocks that did great this year and either redeploy those funds in stocks that do better during recession or keep it in cash for a pullback opportunity. If you're in my discretionary portfolios, this is something I do for you. For those not in my managed accounts, what exactly are these alternatives to the stock market? For the conservative investor, look for cash and money market deposits yielding between 4.5% and 5% right now. Not every financial institution is passing along the better yields. If yours is not, let me know and we can discuss your situation. CDs are also a value once again, with rates peaking between 5 and 5.5% at the 1.5 to 2 year mark if you don't need cash and would like to guarantee those yields a little bit longer. If you're a growth investor and you have a long-term goal where you'd like to see better than 5%, bond closed-end funds look to be a good value buy right now. Many are trading at discounts not seen in many years and could produce equity-like returns over the next year or two. Also for my growth investors, consider some of the buffered investments that are being offered in the marketplace right now. We see them in annuities, ETFs, and UITs. When faced with higher uncertainty, many investors are willing to limit upside potential in exchange for downside protection. If these ideas interest you, you can email me from my website, therhinoinvestor.com. Predicting the future is a humbling endeavor. Nobody gets it right 100% of the time. But when we believe that the potential future risk is beginning to outweigh the potential future gain, it's time to look at where we can shift strategies. An old market saying is, you'll never go broke taking a gain. Taking a little bit off the table wouldn't be the worst thing about now. On a personal note to my clients, you may have seen that Mike and I moved, and we love our new home. It's not far from our old neighborhood, but apparently it's in a cell phone dead zone most afternoons. I've started using my office landline more often, so please add it to your phone under my name. It's not showing on this video, but it's in the email transcript that you receive. As always, talking to you is the best part of my everyday. I appreciate your feedback and I love answering your questions. Video topics for this quarter coming up are great investment philosophies, top mistakes I've seen investors make over 30 years, and in December, we'll have a little fun with animals of the market. You can follow along from your Advise on Client website or any of these social media sites. See you there.